Okay, here's an update on the market. This is Friday, April 17th. This is the daily chart of the S&P 500. It's up 84 points today, up over a percentage, 1.2%. NASDAQ is making all-time highs again, 1.4%, and Dow Jones is up 1.38%. The Dow Jones U.S. Financial is up over 1.3%, and the Dow Jones is up over 2%. So quite a big day today here. So this is the channel that we've been looking at. If I go back, look at the 5-year chart. This is what we've been looking at the last couple of months. So this is our long-term channel here. You see we came down the bear market low last April. And if you go back and look at my March 20th video from a couple weeks ago, I was talking about how I thought that this was just a normal correction. Just given the fact that we've never had, back-to-back bear markets in calendar years, that just doesn't happen. So statistically, I figured this was going to bounce, and we got down about 10%, I think, on the S&P, about 14% on the Nasdaq, and I think the Dow Jones U.S. Financial Index was down about 14% as well. So, pretty deep correction when you look at the actual stocks, the way a lot of the stocks got impacted. If you look at individual stocks across many sectors, I mean, they were down like 20, 30, even 40%. So even though we were down only 10% on the S&P, some stocks, really good stocks with good fundamentals, got hammered. So it was a good buying opportunity. So again, this is the channel here we're looking at. Again, we're at all-time highs, so we basically had a V-shaped recovery. I think if we look at the NASDAQ, if we close up today, that's going to be 13 days in a row. That might be a record for the NASDAQ. I'm not sure, but that's quite a V-shaped recovery there, the way this thing is taken off here. But, again, what we were looking at, if we look at the long-term channel here, is, this upper trend line. We're, gapping up today. So if we can get above that and stay above that, and then we form a new channel, that's great for the market. That'll be very positive. And obviously the NASDAQ has done that. That's very much cleared all hurdles at this point. So again, if we go back and we look at, let's take a look at that MACD, what that looks like now that we've had this V-shaped recovery. And you can see this was the trend line we were looking at, this bearish negative divergence that was showing up for months, and you see now we cracked that white line there, and that's what you look for, basically a break of that trend. So we're well above it, obviously, with this V shape, but made a pretty big low, just about not as bad as April of last year, but that was a pretty, when you look historically, that was almost like a bear market, and the S&P was only down 10%. So this indicator is very helpful when it shows oversold conditions. Likewise, with overbought conditions, you'd see the opposite effect here with positive or positive divergence, as opposed to negative divergence here. But again, that's what we were looking at. We got the correction, and now hopefully it's smooth sailing. We'll see what happens here the end of today and going into next week. But you can see right here where my cursor is, we are above that trend line. We've done that before. We've gotten above it. If I go back out to the 5-year, I've got a double, drawn upper trend line here between these two white lines. But you can see how sometimes we have a little bit of a fake breakout and then it pulls back. So hopefully that doesn't happen here. We've got a lot of gaps. Those gaps often do get filled, which is a concern. But I think right now these breakaways, when you have a breakaway like this above huge resistance, that gap is usually a very positive thing. And oftentimes those kind of breakups or gap ups do not get filled. So that's a positive sign. We can maintain where we are right now and keep moving. So again, very, very positive bullish action here with the indexes. Just really quick, if I go through, one of the things I like to do is I look at weekly. I talk about daily and weekly. So this is the daily chart. Sometimes I'll even look at 30-minute candles on a monthly chart. But if we look at the 5-year, and I move this to a weekly, and I talked about this in my last video, you can see the stochastic, how low this thing was here, before the recovery. I mean, this was as low as it was, even lower than the April of last year, the bear market low. And again, we were only down 10%. So that told you that this was going to bounce, even if it was just a bounce within the correction, this thing was going to move. And now, we're at all-time highs. You can see that candle. I mean, these last 3 weeks have just been unbelievable as far as the move. So, and as far as the daily, going back to that, I didn't think we would come down as low as we did to this 300-day moving average. But again, these moving average lines, they do provide a lot of support. And that's where we came, this yellow line. That's the 300-day moving average, and that's where we bounced off. Same thing with the, if we look at the NASDAQ, we came just below the 300-day here, this yellow line, and then took off from there. So again, that's why these moving averages are very helpful. Some people, that's all they trade on is moving averages, and not just daily, but weekly as well. And it's very, very helpful. That and the trend lines. When trend lines break, I think Apple is, let me just show that one really quick. Apple's a good example. We had a trend line here. We're in a channel. If I go out to the 2-year chart, you can see Apple's in this channel here right now, and we're kind of in the middle of it. But what happened the other day was, we broke out of that channel on Wednesday, or not channel, but that downtrend. So this is an interim downtrend, and I'm just hitting the highs here. And you can see, when this thing broke out, it basically breaks out above that trend line, and oftentimes it'll retest it, which is exactly what it did yesterday. And now it's, it's on its way here. So way up high, right, on the stochastic down here, if we look at the stochastic where my cursor is. But, in the beginning of a new leg up, this thing will stay elevated for a while, just like the indexes will. So I wouldn't recommend selling just based on the stochastic at this point, because we're just breaking out at this point. So, but in any event, that's a good example of a downtrend line that's been broken and now retested and moving higher. So if we look at and then the Dow Jones U.S. Financial Index, I was talking about this one a lot. And here's your downtrend that got broken, and we're off to the races here. But this one had really gone down a lot further, a lot quicker than the other indexes. You can see this went way below its 300-day. And if we look at the weekly on the financials here, this thing was below its 50 weekly as well. So a lot of damage was done here. It didn't get down anywhere near the bear market low from last April, but we were coming along this 150-week moving average here. So this was kind of in no man's land. But it recovered, and when you look at, I think, the individual stocks, the index was not very telling. But I went through this, in that last video. If you look at some of the stocks here in terms of the financials, you could see how, back at that time period, they were bottoming out. Like a lot of these stocks were starting to make higher lows, even though the index was making lower lows. They were making higher lows, like Citigroup. You see Citigroup just took off here. It's all-time highs. Goldman Sachs, and I own most of these, by the way. I was buying these, when they came down to the 200-day, I thought this was a good area. Some of these, some of them didn't get down as far, but once you get back above the 21-day, which is this kind of this brown line, that's a good buying opportunity as long as this thing is curling up. The 50-day is still kind of curling down. You want to get that up, but all the other key moving averages are moving up here. So Goldman Sachs, JP Morgan, all of these I mentioned in my last video, they were all showing, good positive divergence and relative strength from the indexes. JP Morgan actually came down below its 300-day. So that thing really kind of sold off here, but you can see it's had a nice move up. American Express is another one. This was in a nice channel. If I do a 2-year chart here, actually got below the channel a little bit. I'm going to have to redraw this actually, because I had the channel at this low, but I'm going to move that because we've got our new lows here. So that's our new channel, something like that. And you have to play around with these sometimes, these channels. Let me just get rid of that right now, draw a new one. But, sometimes they do, you've got to basically redraw them if there's a new low like this, set of lows that were clearly indicative of the new trend line. I just reposition that. This is Fidelity Active Trader Pro, so I really like this software a lot. And that's our new channel here, and you can see that's basically what we're looking at is trading in between this. So it's got a lot of room to go here, like a lot of the stocks. And if this is just getting started here with a new channel on the indexes, these things can continue to move It's right at its 200-day, and it's above all the other moving averages. So that's very positive. Again, the stochastics are high, but I think when we're going into a new leg like this, they're going to remain elevated for a while. Let's see what else. Some of the other financials, LP, like this one a lot. This one's had some big candles here, but I think longer term, I talked about this as far as the weekly chart. Even though this thing, is down quite a bit, it was staying above its 200-week moving average. And if you look at like the past decade, you can see how this thing, other than the 2020 COVID bear market, pretty much stayed above its 200-week moving average. Came down in 24 and hit the 20 or the 200-week moving average. But you can see, as long as you stay above that, the 200-week is a good buying opportunity. Let's see what else. Morgan Stanley, another strong financial here. You can see that thing is really nice move since the recovery here, and kind of was down here around the 200-day moving average, but was able to hold that. Prudential is another nice channel. If we look at the 5-year chart, well, it's not a channel, but I just drew these lows here, and you see we're staying above a nice symmetric low here on this trend line and bounced off of that. So these are just the little things I like to do in terms of the trend lines, is always have them part of what we're looking at as far as the overall picture, whether it's the indexes, individual stocks, or ETFs. And again, it's really, really important. Can't stress enough how important it is to have software. Every brokerage firm has software, and you just got to spend some time using it. Otherwise, to me, you're kind of blind in terms of what's happening with the support areas, resistance, moving averages, which obviously change every day depending on price. But if you don't have software to look at the charts, I really think that it's tough to do this. Otherwise, you're just kind of buying and holding and just kind of guessing. It's guesswork as to what's happening with the market. And again, I'm not providing investment advice here. This is just how I do things, and really just putting together some videos for friends and a few or family and a few friends. But it's basically the way I look at things when the market between the indexes and individual stocks that are leaders. A lot of the information I look at comes from Investors Business Daily. I have a subscription to that, which is really, really helpful, because they look at the fundamentals of a stock, and they list the top stocks in the top sectors. And I really like to use that fundamental analysis that they provide, and then use the technicals to kind of overlay what the fundamentals are looking at. So, really, I think that's very helpful to have fundamental analysis. I'm looking more at the technical part of things, the technical analysis, but it's obviously important to be buying fundamentals as well, based on good stocks and good sectors. And then the other thing I'll mention, just in general, make sure you have stop losses. If you look at the oil and gas area, you can see here, like, this is ExxonMobil. I mean, this thing is just, falling off a cliff here now. It had a nice high, now it's just dropping like a rock. And so that, these are why you have to have stop losses. If you're riding the 21-day here, this is this brown line right here. You get above that and you ride that all the way up. That's great. You stay in it. But as soon as it breaks that, now you got to be concerned. It did hit the 50 here. So, that was an opportunity maybe, but then you don't want to be holding it much beyond the 50. And now you can see it's just cascading. Chevron, same thing. The market's up 94, 95 points right now. And look at these stocks. These stocks are getting hammered, down 5%, Chevron. So, that's why you got to have stop losses in. Gush is oil and gas ETF. You can see same thing here, just getting hammered today and last couple of days, last couple of weeks. So, really, really critical. Make sure you have stop losses in. And that reminds me, since we just had tax day here on Wednesday, really, really important to understand the tax consequences of your trades. If you are, trading, I gave this an example to some people like Microsoft, right? I mean, this thing was just getting hammered here. Really since its high of 555 back in July of last year. Look at that. So, again, this is why you got to have stop losses. But if you were getting stopped out, let's say you were buying Microsoft and you're getting stopped out, you got to be careful of something called wash sales. So there's disallowed losses if you buy back a stock that you lost money on in the trade within the last 30 days. So you got to be cognizant of that. And you got to be careful too, even across brokerage firms. Like, you may have brokerage accounts with different firms, and the IRS can actually look at that. So if you're trading a stock that you had a loss in, you buy it back in 30 days with another account. It even could be a retirement account like a 401k or an IRA. You got to be careful about that because that could become a permanent loss, if you're doing within that 30-day window. And they could look again across accounts and cross brokerage firms. So something to keep in mind. And while we're on Microsoft, though, here you can see this was a long-term channel, and we came down really close to this low of three. This was the bear market low of last year, 344. We got down to 356. So, again, really extended low, loss here, but now it's just taken off and it's back in this channel here. So that's very, very positive. Same thing with Meta. That was really sold off, and you can see now the bounce there. And this thing really broke some major support. This 581 level, that was really, really critical. And that thing broke. It came all the way down to 520. So that was a huge, huge sell off there. Hit a lot of stop loss orders, but now you can see it's just taken off, and that's what happens. It's kind of like a rubber band. When something goes too far in one direction, it shoots back in the opposite direction, just as aggressively. So just really good moves with a lot of these stocks. So again, financials, I think they were the first ones that kind of gave an indication that the relative strength was basically turning a corner. And then you just had some really oversold stuff like Microsoft and Meta that, they have good fundamental, earnings, and they just clearly, even though they're below all the key moving averages, even below some of their key trend lines and channels, it's just, there's no way that that was going to keep happening. I mean, if you look at Microsoft, the weekly, the stochastic was so, oversold here. You can see this was going on for months here. I mean, this just that's not normal. And you can see we're just finally starting to break above that here. So, when you get up to this point here, you can see what happens and take, if you are in Microsoft or some of these other ones that really got hammered, you basically look at this 5 week or 5 year, weekly, and then, see what happens when we start getting up in the 80 range. But that's a nice candle there. Look at that weekly candle. Huge move this week. Okay, some of the other stocks I think that I talked about in the last video, I'll just hit upon them really quickly. SanDisk, I mean, this thing has just been on a tear. It's basically, consolidating a little bit here, but this thing has been up since it bounced off its 50-day. The 50 days is blue line here. You can see when it comes down to the 50, that's a buying opportunity, and this thing just keeps on moving. So let's see what else we got. Seagate, same thing, memory chip stock. I mean, you can see how that thing's taken off. Got below the 50-day a little bit here, a couple of times, but really, really strong stock. Western Digital, another memory stock. You can just see how that thing's taken off. Wouldn't be buying these now at this point. Obviously, they're overextended if you didn't get in at the 50-day or close to that. But if you're looking to get in the future, maybe if it gets down to the 21-day, that might be a buying opportunity, and certainly closer to the 50. Micron Technology, this has been another great stock. This thing almost came down to the 150, which is a pretty big sell-off there. But it's had a nice recovery. Bloom Energy, nice move here. We had a big gap up the other day. It's consolidating here a little bit, but really nice breakout. You see, we've had this consolidation for several months, and now we're breaking out. So that looks very strong. Fix, this is one that IBD recommended. This again looks really, really strong longer term. You can see how it's kind of bouncing off its 50-day here. So really nice looking stock. And then of course, all of we already looked at Apple here with the breakout, but some of the other ones, Amazon, I mean, I was buying this in around the 200s here. We got down to 196 and 199. This was in a channel here. So you could just see this thing just took off here. Just a really nice move by Amazon, just on a tear. Same thing, AMD, Applied Materials, Micro Devices, AMD. Same thing here. I mean, this thing bounced off its 200-day around, $200 and just took off. Now you can see we're at the top of the channel here, so it'll be interesting to see what happens. It's selling off a little bit today, probably because, again, these trends and trend lines and channels, they do play into some of these algorithms. So you can see we're in a nice channel here, and we came down to the 200-day, and now we're going up against that channel. So it'd be interesting to see what happens if we get a pullback here, or if this thing gets up above this and creates a new channel. We'll have to see what happens there. And then what else? Oracle, I think that was, again, another one that had really been, got a kind of a trend line here that went down below that a little bit, but you can see this thing really took off here. And again, really, really oversold, based on what was going on with the market. So those, I think, those were a lot of stocks that I touched upon in the last video, and they've all, I think, done really well. Caterpillar, I don't know if I mentioned this one, but you can see this thing has just been in a nice, really, really nice move, and gave an opportunity here at the 50-day. You can see, a couple of times here, and now it's moving. John Deere. This one's actually, right at the 50-day below it. So we had a little bit of a sell-off here last couple of days, which was, kind of interesting. So, we have this support here at about 549. And, I think that's the key. If you're into John Deere, we've got to make sure we stay above that former low. But, this one looks like, it's kind of doing a little bit of consolidating here, basing after that big prior move. FTX, that's really taken off nice. This came down to the 50-day, and now we've got some nice movement there. That's Federal Express. And then, actually picked up some Bitcoin with an ETF here. This is BITO. They pay out a nice dividend. And you can see this is starting to break out above former highs. So it's making higher highs now and higher lows. So, this might be the bottom here for Bitcoin, and this thing can start moving. So I didn't buy a lot, but figured it was, again, way, way, way below. I mean, I typically wouldn't be buying something that's in a downtrend like this below all the key moving averages, but this thing has just been so oversold. I just thought it might get a little bounce here at least, and it's starting to move. So sometimes when or not know, but when you're thinking you might have a nice move, this is the TQQQ. So this is triple leverage. You can see how nicely this thing has moved. But this thing was all the way down to 37. So if the Nasdaq is up 10, 11%, this thing is going to be 3 times that. So you're 30-some% with a triple leveraged ETF like this. And then QQQI. I've talked about this one in the past. It has around a 25% dividend yield annual. And you can see here, this thing was down 47 something, and it's in the 52 or 53. So not only are you getting a great dividend, but you're also getting a huge move on this thing as well, which is outstanding. And then, I mentioned the financials. This FAS is a triple leveraged financial ETF, so it monitors the financial index, and you can see how this thing is really shot up as well. So it's another instrument you could use to take advantage of, move in the market. So, those are all doing well. So at the end of the day, this is where we are. Right now we're above this trend line. It'll be interesting to see if we can stay and close above that, and then how we handle things next week. If this thing starts forming a new channel, that would be very, very, bullish, I think, for the next at least 6 months until the midterms, and then we have to see what happens. But, the idea is, people ask me, hey, where you put your stop loss. I basically just look at, like if we go back to SanDisk, basically this thing is really overextended here. So yeah, if you're up 50% from like the 50-day, it's something where you want to say, maybe I'll take some profits, but and look for a pullback to get back into it. And I would say the pullback is, your 21-day, which is right here. So for example, obviously this is changing every day. If I do a 6-month, I'll just come zoom in here a little bit closer. But, on SanDisk, the 21-day is 786 right now, 787. So that would be a buying opportunity if you're not into it. And also, if you start breaking below that, you want to consider that maybe, thinking about selling some shares. And certainly at the 50-day, then 50-day would be a good buying opportunity. But if we were to break below that and start breaking below former lows here, this one is 558. That's a long ways from where we are today. But 517, 558. We start breaking those, and all of a sudden, the trend has changed. But again, to me, the trend is your friend until it ends. So you want to stay in here. You can see if you're riding this 21-day, that's a great area, as far as your stop loss is concerned. Um, if it starts breaking below that, then maybe look at the 50-day, see what happens there. But right now, as long as we stay above the 21-day, just ride this thing as long as you can. Okay, so that's kind of like my picture. Again, that's why the software is so important, because you have to really understand where these moving averages are, where the trend lines are, the former highs, the former lows. All that's really, really important as far as making your buying and selling decisions. And these things change every day, right, based on the price action. So okay, I think that's the update. That was a lot of information, but hopefully everybody was able to make some money. Last couple of weeks has been a nice move, probably historical move when we look at the Nasdaq if it closes up today, which it looks like it will. So okay, hope everybody has a great weekend. Enjoy the weather, and take care.